Here we are at petty cash, and petty cash is fun, but it's kind of hard to wrap around until you understand exactly how to figure the cash short and over and how that works. We set up, and I've kind of given you the entries here. First of all, to set up petty cash. This one wants $300, so literally you take $300 in cash, you write a check, you get the money, and put it in an envelope or some type of cash store. Throughout the month, people will come, you will come in and out writing people needing a small amount of change or a small amount of money to make purchases. They will get the money and they will bring back the receipt for it. Those receipts will add up during the month, and at the end of the month you sit down and calculate. In this case, this one has $104 worth of office supplies and $180 worth of entertainment expenses from the receipts. And you have $29 left in the account. Well, if you add these two, and add that $29, that comes up to more than $300, which means you have too much cash. Now, you may try to dig around and find that, and you may find it, and if you do, then you can adjust the issue. But if you can't find it, then what do? You cannot increase this over $300. But according to this, if I increase it the way this looks, I'm going to have $313. So what I do is I take the stated amount, $300, minus the $29 that I have, and it says I need to replenish my fund at $271, and that will give me $300, which is what I do. Here are my expenses. Here is my replenishment. This comes back up to $300, but now my entry is not in balance. So I have another account called cash short and over, which is for my petty cash, and I'm going to credit it for that $13. And that shows as a gain. I've actually gained money. Now, I'm going to leave that more than likely because traditionally petty cash is going to wobble over and under, over and under. Next month, it may be under $13. And there may have been a mistake, or it may have naturally... and if that does it very much, if there's a big fluctuation there, then you have to start looking at... if there's a problem with the bookkeeping or how the totals are being kept. So that's how you establish a petty cash, and that's if you are over. So if we move down now to the next one, we're not going to do 12 or 13. We're going to do 14 though. And 14 I'm going to let you do, but I'll get you started. You're going to establish it at $200. That is the easy one. You get to the end of the month, and you look at all of this, and you add it all up, you input everything, and you find that there's only $15 left in there, but there's $175 here, and there should be, this is $175, if I take $175 minus my $200, I should have $25 left in my account, or in my petty cash, but all I have is $15. That means I'm short $10. So, what do I do here? As I ponder it, I obviously, if I only have 15, I'm going to have to replenish it to get it up to $200, correct? So, what you have to do as you look at 14 is, what do I do? Well, I need it up to $200, so I have to credit this, right, for $185. I've got $200 here. I have my other entries here that come to a total of $175. Obviously, this is not in balance. I'm going to have to debit the short or over, which means in this case, I'm short the $10. Again, you're going to want to investigate why that happened, and that actually becomes like a loss in the petty cash. So that's kind of how you keep track of petty cash. Now, on the next one, again, we have a thought problem where you're going to think, solve, ponder, explore. And then we come to the very final one, which is the bank reconciliation. And this one's a fun one. I love bank reconciliations because they're puzzles. I've given you the totals in both accounts to begin with. This is the bank statement. This is your books. This is what the ultimate balance is going to be in both of them, just so you have check numbers. I will give you... They use a lot of acronyms here. So the first thing you need to know is EFT is electronic funds transfer. They use BC for bank collection. And they use service, SC, for service charge. And NSF for a non-sufficient check. Now, so what you're going to do, let me help you. First of all, you're going to take everything that's been done on their bank statement, which they give you, and apply let me reverse that. You want to look at the bank statement, but you want to look at what they've done on the books and find out what's been done on the books that hasn't been done here. And you want to apply it. Obviously, it's going to be deposits. It's going to be checks outstanding. And that should bring you to a total of $17,380. Now that you have that one, it doesn't match here though, right? So now you have to take everything they did on the bank statement and apply it to your books. And that's going to be, collection of rent. It's going to be bank collections of notes, of a payment that you may make electronically, a book error that you missed. And that should end up, and you should have the two amounts reconciled and at the same. Then you have to now take these changes that you've made to your books to reconcile that and apply it to your accounts in a journal entry. And that finishes out this particular problem. These are very important to do. You find a lot of mistakes, and you may find fraud. You may find somebody has gotten into your account that you're not aware of. So these are very important. They're more important now that everything is being done electronic. So usually when you're doing them by hand, you look at them more often. When they're being done electronically, sometimes we let that slide. So it's really important to do reconciliations between the two accounts. There is no walkthrough for 8.2. It, again, is a thought problem. It's going to cause you to think about weaknesses in accounting systems and what could happen if you don't keep a close eye on how procedures are laid out. So I will see you actually in 9.1 next.